Okay, good afternoon, everyone, and welcome back to the last part of our Hong Kong Potential Value Stock Series. If anyone is joining us for the first time, not to worry. All the other parts of the series are actually up on YouTube. Later on, I will send the YouTube playlist link in the chat. You can feel free to go and take a look at part one to part three. And a very warm welcome to everyone for joining us again. I'm seeing a lot of familiar names that have joined us in the past few sessions. Welcome back to our last part of this series. So far, Mr. Wong has gone through some various value stocks counters. I just want to go through quickly. Chow Tai Fook, 11 China, Sinopharm Group, BYD Electronic International, Bank of China, CNOOC, and CGN Power. Today, there are another three counters in store for you, so stay tuned. It's going to be a lot of information as usual. Don't forget, there's also a Q&A session at the end of the presentation, so you can type in your questions in the Q&A section below. You should see a little button at the bottom. So without further ado, I would like to hand over the time to Mr. Wong to begin today's presentation. Mr. Wong, please. Thank you.
Thank you. Hi, good afternoon, everyone. We are coming to the last part of the Hong Kong Potential Value Stock Series. Last week, in part three, we picked three stocks, namely Bank of China, CNOOC, and CGN Power. CNOOC, the ticker is AA3, and CGN Power, the ticker is 1816. So among the three companies we talked about last week, CGN Power and CNOOC continues to see new year high recently. So they outperformed the market despite the Hang Seng Index has drops below 18,000 recently. Okay, my last part will also present you three companies. The first one is China Shenhua. The ticker is 1088. China Shenhua is a world-leading integrated energy company based on coal. It's the largest coal production and sales company in China and the second largest listed coal company in the world, and has the largest reserves of high-quality coal in China. Its main businesses are quite diversified, including the production and sales of coal and electricity. Besides selling coal, it also generates electricity itself, consuming the coal it produces. It also operates railway because railway is essential for transportation of coal to the port, to and from the port. So it operates is also in port operation and ship transportation, and it's also engaged in the mid to down streams of the value chain of the involves coal to olefins and coal chemicals and other businesses. The integrated business model of coal, power generation, railway, port shipping, and coal chemistry industry is China Shenhua's unique business model and also its profit model. China Shenhua's development strategic goal is to build a world-class clean energy supplier. Okay, this is the financial highlights of its first quarter business performance. You can see that total revenues increased 0.7% year on year from 87 billion yuan in the first quarter of 2023 to 87.6 billion yuan in the first quarter 2024. The reason is the growth of power generation, railway transportation, and other businesses. And profit attributable to equity shareholders of the company for the first quarter was 17.76 billion yuan, down 14.1% compared to last year. Because this year, in the first quarter, coal prices have corrected and declined from last year. Okay, earning per share was also down 14.1% from 1.04 yuan to 0.894 yuan per share. Okay, the dividend yield is attractive, with final dividend and interim dividend for 2023 totaling 2.51 Hong Kong dollar per share. The dividend yield at current price is about 6.5%. Actually, you can notice that among the companies we picked for presentation here, most of them boast of dividend yield of at least 6%. Okay, so when the US starts to cut interest rates, I think companies offering 6+ percent dividend yield would become more attractive to you to investors looking for yields. Okay. As I mentioned just now, its business is very diversified. So in the part relating to coal, the production and sales of self-produced coal increased slightly. This is last year's data. You can see total production was 324 million tons of coal last year, up 3.5% compared to 2022. It have 5 major coal mines operated by the company, namely Shandong mines, Zhongge mines, Shangli mines. This one is Boracay mines and Baotou mines in Inner Mongolia. Okay, so its mines are located in different parts of China, but namely those provinces that are rich in coal reserves, namely Inner Mongolia, Shanxi and Shanxi. These are 2 different provinces. The first one is with 2A is Shanxi, and the one with only one single A letter A is Shanxi. Okay, so these 3 provinces are the 3 major provinces in China that have very rich coal reserves. Okay, in the first quarter this year, coal sales of the company is 117 million tons, an increase of 8.8% year-on-year, of which the sales volume of self-produced coal was 80.3 million tons, an increase of 1.1% from the previous year. And the sales volume of purchased coal was 36.8 million tons, an increase of 30.5% from the previous year. So add up together, the coal sales for the first quarter was 117 million tons. So the business model for the company is, besides selling the coal produced by itself, it will also purchase coal from other suppliers and do some processing, then resell. So you can see in the first quarter, purchased coal accounted for about 30% of its total coal sales. Okay, and by regions, it's also quite diversified. The company sells coal in northern China, eastern China, central China, and southern China, and northeast China. Okay, and by usage, most of the coal it produces and sells are for power generation, thermal coal. Okay, 16.8 million tons were for metallurgy, for steel refining. Okay, and 58 part of the 58.3 million tons, as in 2023, of the coal are used for chemical production, including coal slurry. Okay, now comes to the railway part. Railway business increased in volume and profit. In the first quarter this year, the company achieved a turnover of 82 billion kilometers of its own railway transportation, increased 10.1% year-on-year. The loading volume of its own ports, it operates 2 ports, namely Huanghua Port and Tianjin Coal Terminal. The loading volume in the first quarter of these two ports was 65 million tons, an increase of 8.2% year-on-year. And the shipping cargo volume was 33.7 million tons, a decrease of 1.2% year-on-year, very slight decrease. And the shipping turnover was 36.3 billion ton nautical miles, an increase of 3.1% year-on-year. And the sales volume of polyolefins was 172,000 tons, a decrease of 3% year-on-year. So its business includes transportation, railway, port operation, shipping, as well as coal chemicals. Okay, in terms of electricity, power generation increased in the first quarter, and the profitability also improved. In the first quarter this year, the company's total power generation was 55.35 billion kilowatt hour, up 7% year-on-year. Total electricity sales were 52.16 billion kilowatt hour, also up 7% year-on-year. And the average electricity price was 409 yuan megawatt hour, decreased 2.6% year-on-year. Although average electricity price decreased by 2.6%, it was made up by the increase in power generation. So all in all, revenue from power generation still managed to increase in the first quarter because of more power generation. Okay. As at the end of April 2024, the medium and long-term contract price. I mentioned earlier that coal price, this is the trend of the thermal coal price since 2022 for the last 2 years. So it peaked around 660 yuan, about 660 yuan in the third quarter and fourth quarter of 2022. And 2023, the price of thermal coal in China corrected from about 660 to around 640 yuan per ton, okay, representing a decrease of about 10 yuan per ton as compared with that at the end of the previous year. So the drop was quite moderate, less than 10%. It's just actually less than 2% drop. In respect of the demand side, China's commercial coal consumption increased by approximately 7.5 year-on-year in 2023. Okay, although China is striving to promote green energy, renewable energy, yet coal consumption coal consumption still accounts for more than 50% of power generation in China. It will take time for this ratio to come down as the install capacity of renewable energy continues to increase. So it will take time. For the time being, China still relies on coal-fueled coal consumption. Okay, in the first quarter this year, the national industrial raw coal output was 1.11 billion tons. So now you can have a rough idea of the output, coal output, raw coal output in China is around 4 billion. So one quarter is about 1.11 billion. So it's around 4 billion to 4.4 billion tons a year. Okay, in the first quarter this year, output was down slightly by 4.1% compared to the first quarter last year. Okay. Some highlights of the company. On June 26th last year, the company announced the progress of the work on the acquisition of certain assets held by the controlling shareholder. Actually, controlling shareholder is a state-owned company, which still owns very valuable assets, coal mines in China. So going forward, there's still room for Shenhua, China Shenhua Energy, to acquire various assets from its controlling shareholder. Last year, it has announced the acquisition of 3 coal mines under production from its controlling shareholder, namely Yannan Mine, Jani River Strip Mine, and Tarangala coal mine. At the end of 2022, the first 2 coal mines retained recoverable coal reserve of 410 million tons under PRC standards, with coal production capacity of 10.7 million tons per year, and completed commercial coal production approximately 8.7 million tons. So these 2 coal mines are still under construction, and the completed commercial coal production was about 80% of the production capacity. The production capacity under construction of the 3rd coal mine is 10 million tons per year. And as of the end of 2022, the recoverable coal reserve of this Tarangala coal mine under PRC standard was 920 million tons. So it's a much bigger coal mine. So the 3 coal mines adding together, it will, upon completion of the acquisition, the remaining recoverable reserves of the company will see an addition of 1.3 billion tons, 410 million tons from the first 2 coal mines and 920 million tons from the 3rd coal mine. So it will expand the recoverable reserves of the company quite substantially. Okay, this is the valuation of China Shenhua Energy. Now it's trading at 1.7 times P-book, price to book value, dividend yield 6.3%, ROA 10.3%, and ROE 16%. Net profit margin 18.8%. I think close to 20% net profit margin is quite decent, a very decent net profit margin. It's not gross profit margin, it's net profit margin. And earning per share last year was 3.253 yuan per share. Okay, reasons for our picking of this stock. It is expected that supply and demand in China's coal market will be basically balanced in 2024. Last year, because of the economic slowdown, coal, we see a slight oversupply of coal, so that caused downward pressure on coal price last year. And this year, we are expecting a more balanced coal market in China, and which will result in more stable coal prices. The coal industry has obvious characteristics of high dividends, not too much capex most of the coal mining company do not need to spend a lot of capex, capital expenditure into new mine construction. Therefore, they are able to pay higher dividends to their shareholders. And after the supply side reform to control the increase in coal supply by the Chinese government, the operating conditions of the coal industry have been greatly improved, which is in favor of the coal producers. And coal companies have strong cash flow and high dividend payout ability. In 2024, with the implementation of fiscal policies, steel inventories will be further reduced. And another key usage of coal besides power generation in China is steel refining. So in the past, the demand for metallurgy coal is not that was not that high. It's because the steel industries is seeing high inventory. Now with further reduction in steel inventories, the blast furnace operating rate will continue to operate at a high level, which means more demand will be expected for metallurgy coal or for coking coal going forward. And in terms of domestic supply, the supply of coal is limited due to regulation, the supply side reform, which aims to eliminate, to phase out the backward coal mines. It is expected that the import volume of imported coal will remain stable in 2024. In China, the government has a quota. Every year they set a quota for coal imports. So this will manage the volume of imported coal to and will lend support to coal prices. So the overall coal supply is expected to be tight this year. The company, China Shenhua Energy, has the advantages of an integrated coal, electricity, roads, ports, and shipping industrial chain. And it has a high proportion of long-term coal sales contracts. That means it's more, the visibility of its sales revenue is higher, is more visible because it has entered into more long-term coal sales contracts with its customers. And stable performance, long-term focus on investor returns, a high dividend ratio, and also driven by the market value assessment of central enterprises, state-owned enterprises. Its valuations is expected to increase further. Okay. Its share price performance quite strong this year so far. You can see that it has risen to about 34 Hong Kong dollars recently. And this is a comparison of price to book value, P-book. It used to trade to be cheaper than its peers. The red line represents the P-book of its peers, comparable peers. The white line is the P-book of Shenhua. But since last year, it's the second half of last year, it has caught up, maybe also boosted by the 中特股 China valuation, state-owned enterprise valuation. The market is looking at the higher valuation for those state-owned companies. So now it's trading at 1.42 times P-book compared to around 1.17 times P-book among its peers. So we think the current price is a bit pricey. If we take 1.3 times P-book, a good entry price would be around, now is let me see, today is about $34. So Shenhua, yeah, no, sorry, it's 39.3, close to 40. It hit a year high of 40.1 Hong Kong dollars this morning. So we would recommend an entry price of $37, about not more than 10% correction from the recent high. Now is a bit pricey. So this one we recommend investors to wait for a lower entry price around 37 Hong Kong dollars. Okay. The second company that we think has potential value is China Communications Construction, 中交建, ticker 1800. It's a leading transportation infrastructure enterprise in the PRC. It is the industry leader in each of its core businesses, namely infrastructure construction, infrastructure design, and dredging. The company is capable of providing integrated solutions throughout each stage of infrastructure projects for its customers. And the company is the world's largest port road and bridge design and construction company, and the world's largest dredging company. It is also the largest international contractor and highway investor in China. And the company also owns the largest engineering fleet in the world. The company currently has 35 principal wholly owned or controlled subsidiaries, and it operates its businesses in all provinces, cities, and autonomous regions of China, including Hong Kong and Macau SAR, and has established its global presence in 139 countries and regions. So it's also well expanded in overseas markets. Okay, last year, its total revenues increased by 5.1% from 719 billion yuan to 755 billion yuan in 2023. Gross profit increased more by 12.9% from 83.6 billion yuan to 94.5 billion yuan. Profit for the attributable to equity shareholders increased 22.3% last year from 20.226 billion yuan to 24.7 billion yuan. Okay. Earning per share increased 26.1% from 1.15 yuan to 1.45 yuan. Last year, it declared total dividend of 0.3226 Hong Kong dollars per share, and the dividend yield is now around 6.5%. Okay. This is the new contracts and its backlog. So for construction company, we always look at the contract on hand, the new contracts it has engaged in, it has entered into, and also the backlog, the contracts on hand, which will provide visibility or predictability of future revenue growth. Okay, so in 2023, it has signed a growth of 13.7% in new contracts in value. This is the contract value. And you can see here, most of the contracts are related to infrastructure construction, represented by the blue color. Infrastructure design, less, and the other contracts come from dredging, represented by the green color. Okay, backlog, also most of the backlog contracts on hand are related to infrastructure construction, and then followed by dredging and infrastructure design. Okay. New contracts of infrastructure construction, we have further breakdown on the infrastructure construction. 50.9% related to urban construction. Okay, so China now is doing the so-called urban village, Chengzhongchuan, and a lot of urban renewal. So it will stand to benefit from this trend. It will receive more contracts in urban construction going forward. Now it accounts for 50.9% of the new contracts signed in 2023, followed by contracts related to road and bridge construction that accounts for 22.4%, and then overseas projects account for 18.9% of the new contracts signed last year, plus 5.4% from port construction and 2.4% from railway construction. Okay. The company reasons for recommendation: the company actively deploys urban village business. That's what I mentioned just now. Chengzhongchuan, cultivate new strategic industries and create long-term growth engines. The company continues to optimize the layout of big city, 大城市, business strategy, with the rapid advancement of the three major projects, including new urbanization and affordable housing, 就是保障房, 保障性住房, construction of dual use for peacetime and emergencies, public infrastructure, 平基建设, 平基建设, and the redevelopment of urban villages, 城中村改造. Its big big city business is expected to continue to grow rapidly in the future. These will be the three main growth drivers for the company. And it is set in the policy by the central government in China. For the first quarter this year, new contracts continue to grow by 10.8% year-on-year to 507.3 billion yuan, achieving 25.5% of the company's annual goal, wherein the value of new contracts of infrastructure construction saw an increase of 16% year-on-year to 464 billion yuan last year. In the first quarter. And then in infrastructure design, the amount, the value, new contracts value was 10.1 billion yuan. 29.2 billion yuan came from dredging, and others account for 3.5 billion yuan. These are the new contracts signed in the first quarter. The value of new contracts of all businesses from overseas markets amounted to 91.23 billion yuan this first quarter, representing an increase of 9.37% as compared to the corresponding period of last year, accounting for approximately 18% of the company's new contracts value it entered into in the first quarter this year. Okay. So the share price also fare well so far this year. Now is at this is 1st of May when we prepare the slides. Now the company is trading at 1800. Now it's $4.90. Up another 10% since early May. Okay. Yet it's still below the average P book. We look at the P book of the company. The average P book of its peers is 0.4 times. Now it's about 0. Because it has risen. Early May it was 0.23 times P book. Now it's about 0.27 times P book. Okay, so we are targeting further narrowing of the gap in terms of P book between the company and its peers. If it manages to narrow to see its P book, price to book value, increase to 0.3 times, the target would be no, it's 490. Last year, the book value is 16.7 cents, 16.7 yuan, 16.7 yuan. Let me see. This is yuan. 16.7 yuan. Hong Kong dollar, it would be 18.37. 0.3 times P book would be 550. We are looking at the first target of 550 Hong Kong dollars, the target price at 0.3 times P book. If it manages to have its P book raised to close to its peers, that is around 0.4 times P book, then the target price would be $7.30, 7.30. Okay, so these are the two price targets based on an estimated price to book value. Okay, last company is China Mobile. This, I think all of you are familiar with China Mobile. It's a leading global communications and information service company. committed to providing comprehensive communications and information services to individuals, families, government, and enterprises, and emerging markets. It is a technology leader and innovation promoter for the development and growth of China's information and communication industry. For more than 20 years, the company has continuously promoted breakthroughs and applications in information technology and promoted the leapfrog development of China's information and communication industry to first is follow 2G, then breakthrough 3G, then synchronize 4G, and lead 5G. Now, I think it's getting prepared for the 6G era. Okay, the company continues to promote transformation and upgrading and innovative development on the basis of voice, data, broadband, dedicated line, ITC, cloud computing, Internet of Things, IoT, and other businesses. It actively explores new blue oceans of digital economy, continuously launches personal digital content and applications such as ultra-high definition video, video ringback tone, mobile authentication, Rice Supermarket. This is a platform, supermarket sort of e-commerce platform. Expands diversified smart home operation services such as entertainment, education, elderly care, security, etc., and leads the implementation of demonstration projects of Industrial Internet, DICT, which stands for Data, Information, and Communications Technology solutions, DICT solutions, such as smart cities, 智慧城市, industry, transportation, and medical care. Okay, in the first quarter this year, its total revenue increased 5.2% year-on-year from 250 billion yuan to 263.7 billion yuan. However, the EBITDA saw a slight decline of 2.3% from 79.9 billion yuan to 78 billion yuan. EBITDA margin also saw a slight decline of 2.2 percentage points from 31.8% to 29.6%. Yet, profit attributable to shareholders of the company increased by 5.5% from 28.1 billion yuan to 29.6 billion yuan in the first quarter this year. And in 2023, it declared a total dividend of 4.83 Hong Kong dollars per share. And current dividend yield is about 6.6%. Okay, so you can see one thing common among the three companies or the other 9 companies we recommended in the last 4 series. Most of them are offering dividend yield of more than 6%. Okay, this is the operating data. You can see total customers close to 1,996,000,000 as at end of March. Net additional customers in the first quarter has sped up, accelerated to 4.63 million, and 5G package customers total close to 800 million. 5G network customers 488 million. ARPU improved from 44.9 yuan in the first quarter last year to 47.9 yuan in the first quarter this year. Total voice usage, I think that's universal everywhere. Now customers are using less voice usage. So total voice usage dropped from 695.8 billion minutes to 663.4 billion minutes. And average minutes of usage per user per month also saw a drop from 232 minutes per user per month to 224. But I think that's not, we think that's not important because now they earn more from data usage and other services, new businesses. Handset data traffic was 38.9 billion gigabyte. Average handset traffic per user per month was 14.9 gigabyte per month. As for its broadband business, healthy growth of total wireline broadband customers from 298 million customers in the first quarter last year to 305 million in the first quarter this year. Net additional wireline broadband customers was 6.83 million, an acceleration from the 3.56 million addition in the first quarter last year. Okay, digital transformation revenue. This is more important for the company rather than voice message revenue. Digital transformation revenue ranked number 1 for 2 consecutive years in service provider digital strategies, according to Omdia, an authoritative international research institute. Its digital transformation revenue ranked number 1 for 2 consecutive years, increasing by 22.2% in 2023, from 207.6 billion yuan to 253.8 billion yuan. Outstanding performance for CHBN markets. What does this stand for? C stands for customer market, H stands for home market, B stands for business market, and N stands for new market. So in 2023, we saw healthy growth in all these 4 markets under China Mobile. The customer market saw a growth of 0.3% to 490 billion yuan. Home market revenue saw a faster growth, 13.1% increase to 131.9 billion yuan last year. And business market grew by 14.2% to 192.1 billion yuan. New market saw an even faster, more rapid growth, 28.2% increase to 49.3 billion yuan last year. Okay. Home market, home business HBN revenue as a percentage of services revenue, further optimized revenue structure. It increased to 43.2% of its services revenue from 39.8%, an improvement of 3.4 percentage points compared to 2022 in 2023. It maintained leadership in dual gigabit network. It deployed the world's largest RedCap commercial network and constructed the 1+5+5 innovation showcase cities, and successfully built the world's first 5G new voice network, gradually progressed research and experiment around new solutions based on the 5G-A technology, including multi-carrier aggregation, sensing and communication integration, passive IoT, Internet of Things, space guide ground integration, and network system with AI empowerment to accelerate industry development. So I think going forward, AI will also empower the company and accelerates its revenue and earnings growth. So in terms of base stations, it has 1.94 million 5G base stations put into use in China, including 620,000 base stations, 700 megahertz base stations. Okay. Household with gigabyte broadband coverage increased by 130 million last year to 390 million under China Mobile. Okay, scale development of integration platform. It has built infrastructure for the circulation of fundamental data elements by launching the industry's first data switching service network, short form DSSN, platform and the all-in-one data router. So annual deployments reach 580.7 billion times accumulative annual deployments. So big data management capabilities is the highest level, and data security capabilities also highest level in China. Okay. Ongoing leadership in the computility network commenced constructing a hyperscale standalone intelligent computing center in Huerhoten. This is Inner Mongolia, alongside 12 intelligent computing center regional nodes in 11 provinces in China. It has also sped up the realization of N+X multi-layer and full coverage intelligence computility planning. Okay. Customer group scale grew across the board. Its 5G network customers increased by 138 million to 465 million. This is network customers. Household broadband customers increased 20 million to 264 million. And corporate customers increased by more than 5 million to 28.37 million. Okay. Total number of connections increased by 414 million to 3.354 billion. That is that renders the company to be the leading total number of connections in the world. Okay. Direction of AI applications development in 2024. As I mentioned earlier, AI will empower the company. So it's going to create a model as a service, MaaS. You have heard about PaaS, SaaS. Now comes the term MaaS, model as a service. Provide AI computility plus large model services to diverse industries with integrated software and hardware facilities. Okay, build AI product families. It will promote AI upgrade of products such as China Mobile Cloud Drive, video connecting tones, 5G new voice, etc. And develop AI industry applications by promoting widespread use of AI applications in popular industry sectors such as the medical, education, manufacturing, energy, and transportation, etc. Going forward, it will also vigorously stimulate new growth momentum for new businesses, including the China Mobile Cloud, Naked Eye 3D, cloud handsets and cloud computers, and IoVT, and also providing industry solutions. Okay, business development targets for 2024. It strives to achieve favorable growth in revenue and profit. 4 targets: customer market, net addition of 80 million 5G network customers in 2024, stable and healthy growth in mobile ARPU. With regard to its business market, so it all boils down to the 4 markets, CBHN, the 4 markets. Business market, net addition of 4 million corporate customers, favorable growth in business market revenue. In terms of home market, they are targeting net addition of 80 million household broadband customers and stable, healthy growth in household customer blended ARPU. And in new market, it's targeting rapid growth in new market revenue, although there's no numerical target given. Okay. Reasons for recommendation: high dividend with stable dividend per share outlook, while the company's cost control and efficiency improvement will enhance its profitability. So the dividend level is expected to exceed market expectations. Dividend yield of 6.6% is higher than other large cap telecommunications company. The other 2 are operators, telecom operators in China, namely China Unicom and China Telecom. Among the 3 operators, he has the highest dividend yield. High prosperity. The company insists on the integration and expansion of Connection Plus, Application Plus, rights and interests, improves the existing customer operation system, and further consolidates the scale foundation and value foundation of growth. In first quarter this year, the company's mobile business ARPU was 47.9 yuan. Last year was first quarter was also 47.9 yuan, so it remained stable there. And 5G users increased to 799 million, and 5G penetration rate reached 80%, rather high. In the home market, the number of home broadband customers increased to 269 million, and the comprehensive ARPU of home broadband increased by 1.8% year-on-year to 39.9 yuan. And then another reasons for recommendation is getting prepared for the development of 6G technology. And we expect China telecom operators will continue to lead as they did in 5G technology. So it will lead in 6G technology development. Okay, current share price also performed quite strongly recently. Now is trading at today is let me see. Today China Mobile, the share price was $74.75, close to $75, but it's still much cheaper than its peers. The white line represents the PE. Now we look at the price to earnings. It's now trading at around 10 times PE. Its earning per share was 6.16, slightly more than 10 times. Its last year, its earning per share was 6.16 yuan. Okay, so it now is trading at 11 times, and the peers are trading at 14 times on average PE. So we have two price target for China Mobile. If its PE is valuation and is enhanced to 12 times from the current 10 plus times, it will be $81. The price target would be $81, 10% upside. But if it manages to catch up with its peers, trading at 14 times PE, then the target price would be 95, close to 95 Hong Kong dollars. So we have two price targets for China Mobile based on the estimated PE, price to earnings ratio. Okay, so also this is a comparison among China Mobile and China Unicom and China Telecom. PE, although it's not the cheapest, it's also not the most expensive. The one with high PE is China Telecom, and China Unicom is the cheapest among the three. But dividend yield, it has the highest dividend yield compared to Unicom and China Telecom. ROA and ROE also outshine the other two. You can see ROA 6.61%, much higher than those of China Unicom and China Telecom. ROE also better than China Unicom and China Telecom. Net profit margin, yes, a double-digit net profit margin of 13.06%, whereas China Unicom and China Telecom only have single-digit net profit margin in the range of 5 to 6%. Earning per share, just now I mentioned, is 6.16 yuan last year. Okay, so this ends my presentation here. Yeah, thank you for your time. China property issue has affected Xinyi Glass Holdings. Better to sell at its price as those nosedive from $18. What's your advice? Yes. Besides, because it also owns Xinyi Solar Glass, which also underselling pressure recently because of oversupply in the solar power industry, from silicon to solar glass to solar panels. Okay, 868. Yeah, now it's testing the support of the 100-day moving average, which lies around 8.35. If it breaches the support of the 100-day moving average, 835, this would be the last cut loss price. Actually, its share price has weakened quite substantially over the last 2 weeks. Okay, so we will recommend sell, especially if its share price uh, breaches the support of the 100-day moving average, which currently lies at $8.35. What's the total China market consumption of coal per year? It's close to 4 billion ton. Very close to the production. Production, I mentioned just now, is 4.4 billion ton per year, and consumption is slightly above 4 billion tons. With the push towards renewable energy, what kind of decrease is expected gradually over the coming years? I think they are targeting the percentage from about 50% to 30% or below 30% by 2030. Okay, or even if they fail to achieve that target, which I also think they may not. China is still very dependent because coal is so cheap in China. So the transition will be gradual, quite gradual, maybe beyond 2030. We'll see the percentage of coal consumption going down to close to 30%. Okay. Thanks for your efforts and presentation over the last 4 sessions. What will be your top 2 stocks that you will choose to invest from what I have presented? China Mobile, I think, is one of among the top 2, if you ask me, top 2 stocks, because it will also have the AI concept. It will benefit from the AI applications in China. Okay, besides that, I think BYD Electronics, because of its diversified business. This one is more. I would choose BYD Electronics, not because of the dividend yield. Among the other 11 companies, more or less, the dividend yield are very. If you eye on the dividend yield, they are more or less quite similar, around 6 to 6.5% dividend yield. But BYD Electronics may offer better growth prospect in addition to besides the dividend yield. Okay. With reference to China Mobile, can you give your view on China Tower? China Tower, the business is not so diversified, and its revenue mainly comes from the letting out of the towers to the operators to build base stations. Of course, 5G, 6G require more because higher connectivity require more number of base stations that will, in a sense, benefit China Tower. Yet its business quite single line. That is the letting of. It's like data center. Its business model is very much like data center. The revenue, it derives revenue from renting out the tower it owns. And in terms of PE, I would and also dividend yield. Why its share price is so underperformed because compared to China Mobile. China Mobile is trading at just now 10 times PE and yielding 6.6% yield. Now, China Tower, its PE is let me see, it's close to, I think, 14 times PE. PE is 16.5 times compared to around 10 to 11 times PE, and the yield is only 4%. So that explains why it's not so attractive compared to China Mobile or even to the two other telco operators, China Telecom and China Unicom. Okay, for a new investor in Hong Kong Stock Exchange, please explain this N to S and S to N connect. Okay, inflow and outflow. How do they affect the prices? Also, how is the short volumes so high in Hong Kong? 15 to 20%. How do they short the stocks by borrowing scripts or options or warrant trades? Okay, very good question. Stock Connect, it's both way traffic. Northbound is from Hong Kong to China. So because the A-share market is still not open to foreign investors, in the past, foreign investors may gain access to the A-share market via QFII and RQFII. If they have the quota, they can invest in A-share market using the qualified foreign institution investor quota. In the past, QFII and RQFII. RQFII stands for Renminbi Qualified Foreign Institution Investors. So if they need to get the quota first, or the status, then the quota, and they can invest up to the quota into A shares. Okay, but after the launch of the Stock Connect, foreign investor now can invest through this Stock Connect into the A-share market, and this is known as northbound, meaning fund flow from the south to the north. And southbound means Chinese investors now can also invest in Hong Kong, in the Hong Kong market via the Stock Connect, and the fund flow is from north to south. Okay, in the past they announced on a daily basis the inflow and outflow from both way. But starting from, I think, last month, they had stopped the daily announcement of northbound fund flow. They no longer disclose the daily fund flow into the A-share market. But Hong Kong still disclose daily daily fund flow from China, the daily southbound fund flow. So that would be a reference point for investors, although that will not, I mean, we're not totally dependent on southbound fund flow. There are other factors that will affect the Hong Kong market. So for instance, foreign capital inflow and outflow still has a big influence on the Hong Kong market. Okay, the short volume, how do they short the stocks? There are many ways to. The most direct way to short the stock is by borrowing the stock first from the lender, from the owners holding the stocks. You need to borrow, because if you don't borrow the stocks before you short sell the stocks, it's criminal offense in Hong Kong. It's known as naked short selling. So before doing short selling, you have to borrow the stock from someone who owns the stocks, and then you short sell the stocks, and then subsequently you need to buy back the stocks to return it to the lender. This is the way how it works. Stock short selling. Okay, a lot of the derivative issuers in Hong Kong are making use of stock short selling to hedge their products. For instance, warrants issuer. if they issue put warrants, they need to hedge their put warrants by selling short selling the underlying stocks. And also same applies to bear contract, bear contracts, 熊证. The issuer also needs to hedge their position by short selling the underlying stocks. So that explains why the short volume being so high in Hong Kong. Sometimes it can be as much as 15 to 20% of the daily volume, because a lot, actually, a big part of the short selling comes from derivative issuers, such as Warren and CBBC bear contracts issuer. Okay, understanding will have more. Tracker fund of Hong Kong price is now 1837. What's the ideal price to enter? I think if we are still looking at the current last 3 weeks, the Hang Seng Index declined from above 19,000 to currently around 18,000. We still view this as a correction, and the correction is very, in our view, for the time being, is very close to the target of 17,600 for Hang Seng. So for tracker fund, the ideal price to enter, if the Hang Seng Index find support around 17,600, it will be $17.80 to $17.90. It would be around 1780, 1790 Hong Kong dollars. Okay, what's your view for Meituan and Baba? Meituan looks okay lah, because its first quarter results better than market expectation, and it's surprising that after the opening up, I mean after the COVID epidemic, people are still, because people have the perception that demand for food delivery may weaken after the end of the COVID epidemic. Yet the first quarter result shows that there is still increasing demand for food delivery in China. Yeah, so and in the traveling segment, it also benefits from more Chinese residents traveling within China and also outside China. Baba, our view is neutral to a bit pessimistic, slightly pessimistic, because of the competition, the intense competition among e-commerce platforms in China. Is facing keen competition from its competitors such as Jingdong, JD, Pinduoduo, and also Douyin, and other competitors such as Kuaishou and Bilibili. Are the stocks for LT investing retirement income? Any tax on dividend? Some of the Chinese companies, the dividend tax will be withheld. Okay, so you will receive the net dividend. Yeah, but Hong Kong, if you invest, there's no tax on dividend under the Hong Kong tax regime. How about JD and BYD? JD is better than Baba because the e-commerce is more competitive, and now is now embarking upon a self-direct strategy. That means the merchandise, the goods on its e-commerce platform, the percentage of self-operated products is rising, that will result in better earnings for the company. Because for third-party goods, they only earn the commission from the operators. But for self-direct sales, they earn more. They can earn more. Okay. BYD actually is the most profitable car manufacturers in China, and maybe one of the few that can make profits in China. But our view is we still have reservation about the China EV market, because now competition is getting more and more intense due to the price war, and also Europe now is imposing tariff as high as 38% on import EV imports from China, and that will eat into their profits. Okay, so I think it's almost time. It's 2:12 already. So I would like to end the presentation here and the Q&A here. And thank you for your time for the last 4 sessions I have with you. I am looking forward to, I think next month, I will also do the quarterly presentation on Hong Kong and China. So please watch out for the announcement of the date, the scheduled date for my next webinar in Singapore. Thank you.
In line with the value stock series that we have been going through in the past 4 sessions, today included, okay, you can stand a chance to win very attractive prizes when you invest in Hong Kong listed equities and ETFs. Okay, so all you need to do is to participate in this is to have a buy contract executed during this promotion period, which is actually from 13 May, we already started, all the way until 31st of July. So the more buy contracts you have, the more chances you have in this lucky draw. Okay, so some of the prizes to be won are actually a pair of air tickets to Hong Kong, a stay in Shangri-La Hotel Sentosa, a mystery gift from Chow Tai Fook, some gift cards from Samsonite, Xiaomi, and Hai Di Lao cash vouchers as well. Now, I know some people might be new to investing in the Hong Kong market, and you might be thinking, oh, okay, I'll be trading a lot less than people who have already been trading in Hong Kong market. Well, not to worry, actually. There are 2 draw categories available for both seasoned and new investors as well. Okay, so if you have not been trading in the Hong Kong market and you're just starting out now, you'll actually be sorted into a new group where you can stand a chance to win the first, second, and third place as well, rather than competing against more seasoned investors. And the more seasoned investors will be competing against each other to win first, second, and third prize, and so on. We have some vouchers, we got some cash credits as well, all the way up to 50th prize actually. So no worries about that. Okay, how will the winners be announced? Actually, at the end of the trading session, we will cut off all the trades, and there will also be a live stream posted on the website. I'd just like to share the website link with everyone here in the chat now. Okay, so you can visit our website here to hang on to basically learn all the details of this promotion as well. But I just like to go through what's actually a valid trade. So for example, if you bought 1 lot of Meituan and later on the same day you bought 1 lot of JD.com, these are actually 2 buy contracts, so you get 2 different chances, 2 different entries in our lucky draw. And if let's say you bought 1 lot of Meituan and later on the same day you bought another lot of Meituan, this will be amalgamated into 1 contract, so it's actually only 1 entry into our lucky draw. Okay, if you bought, let's say, 1 lot of Meituan today, and then the next trading day you bought another lot of Meituan, this is on a separate day, so this is 2 entries into our lucky draw. And also, we are not going by lot sizes, so if, for example, you bought 3 lots of Meituan, it doesn't mean you get 3 entries. Okay, I got one. I see a question. What is the minimum lot size of Hong Kong stock? Okay, actually, the minimum lot size varies from different Hong Kong stocks. So depending on what you want to invest in, the minimum lot size actually changes. Okay, hope that answers your question. So remember, the valid entry time is actually now. If you haven't started yet, all the way until only 31st of July, the end of the trading day, we will cut it off, and basically there will be no more entries into this lucky draw. Okay, if you're, let's say you're a little bit conflicted on, uh, what's the uh, maybe what shares do I buy, or maybe I want to view what other value stocks there are. We actually have a lot of information available on the web page, as well as in our market journals on the Poems website as well. So as you can see, if you visit the web page, you can go to our Poems Mobile Tree communities, can discuss it with other investors, can discuss it with our staff as well. Strategy and stock picks. Just now, the webinar that Mr. Wong was referring to earlier on, his quarterly one, is actually the next version of the strategy and stock picks. But if you would like to see the previous one, you can also visit our webpage and see. And also, if you would like to register for the Phillip Hong Kong Investor Notes, you can actually go ahead and register through our webpage here as well. So I've come to the end of the explaining the promotion. Thank you everyone for staying, and for those people that I see a lot of repeat attendees, thank you very much for coming to all four. I see some names that have been here for all four of them. Thank you very much. We hope that we've been able to add some value into your investing journey, and have a good day ahead. We've come to the end of the webinar. Thank you so much.